This is lunchtime. Here's Devan Murugan at the money desk now. Devan, in spite of the court victories, businesses, you're going to tell us, still have a fight ahead of them as they seek business interruption payouts.
Indeed, Jeremy. Businesses claiming COVID-19 related payouts from insurers can expect a big fight ahead of them, as you say. That's in spite of this Supreme Court of Appeal ruling last month, which upheld a previous order that insurer Guardrisk pay for the losses incurred by Cafe Chameleon resulting from the lockdown. You'll remember that. That claim set a precedent, but insurers still want to limit their payouts. The group's CEO, Woolley, certainly thinks so. He joins us on the line. Ryan, thanks indeed for your time. You've got 750 clients with claims amounting to about 4 billion rand. You say they should expect a real fight to start now with insurers. Why is that?
Well, two factors. One is that the insurers are now reluctant payers, and they'll try anything else that they can to try and limit their liability. One will be to try and limit the period that they pay for, the indemnity period. The second will be to try and fight the quantum, to try and dispute the amounts that should be paid to these clients.
I'm wondering how they would do that, because as you say, they would try and limit the actual amount for the payout. So what can some of these very distressed businesses expect in their strategy there?
Well, I think that what we're seeing with Santam, who've recently announced that they will be assessing and settling certain of their business interruption claims on certain of their policies, have come out and said that despite there being a judgment in the Mar Africa matter, that the indemnity period will be the full policy limit of 6, 12 or 18 months. They are going to make settlement offers of 3 months in full and final settlement. And if the clients wish to dispute the further indemnity period issue, they must issue summons and litigate. They're not going to allow the Mar Africa case that will probably be at the Supreme Court in March, April, to set any precedent for those clients, which we find just unconscionable, because these clients have been waiting patiently. We are saying let the SCA make a decision, and out of that it will be binding on all policyholders with these clauses and with the relevant indemnity period description in the hospitality and leisure's policies. We find that it's just not treating the customer fairly, and once again just showing the insurers are baring their teeth as opposed to trying to be fair to their clients.
You say they're waiting patiently, but they're really hanging by a thread, aren't they? I'm wondering, what is the role now from the Financial Sector Conduct Authority? Shouldn't they have a greater presence in this fight, Ryan?
Look, the FSCA have been very vocal and very supportive of our position that these claims should be paid. They've done that from the beginning through Makompi Rapasha, who heads up the Conduct Authority's action group on this matter. So I think, yes, they can do more now that they've got a Supreme Court decision. I think that we're waiting to see what their reaction's going to be. But we are starting to see the dominoes fall. We are starting to see Guardrisk have obviously come out and said that they'll settle these claims. Hollard have come out and said that they will also settle the claims. They are cherry-picking the policies that they believe that the claimants will be able to claim against, which we think this is where the FSCA can step in and say, look, guys, the semantics is one thing, but these policies are wide. They're designed to pay for this sort of a loss, and the clients are desperate. You cannot continue to treat them like this.
But you've got a battle in your hands here, don't you? Because this sort of thing has not really been done in South Africa's history. And I'm wondering if those payouts are going to take some time, whether or not these establishments have got the stamina to hang in there.
That's a very real issue. We've got an email over Christmas from a client saying, I'm sorry, but if we don't get money within a week, we're closing our doors. And that's the reality, is that unfortunately that does play into the insurer's favor. If businesses don't survive and they are liquidated or wound up, their policy dies with the business, and essentially so does the claim. So insurers again win out of that position. So we've tried to work with our clients very carefully, making sure that they do last and that they do survive. but it's only just they're decimating their savings, going into huge debt in order to keep going. And obviously with the current lockdown regulations coming back into full swing, it does have a devastating effect. And businesses that would have 12 months cover would still be covered up until March this year. But with insurers trying to limit their exposure, it means that they know that these clients are desperate. So any offer that they can dangle in front of them, they'll take. And that's what Santam are doing. Santam are saying their offers are 3 months, full and final, and they're just going to ignore the fact that there's an SCA process that still has to be followed. So
we'll see how this one pans out. Ryan Woolley, thanks very much indeed for talking to us there.